The celebration of rate cuts is over.
We had a good streak, didn't we?
We had 7 in a row.
Oh,
9 months of rate cuts.
maybe timestamp it, April 16th, the day. We're doing this episode just after the news. And I don't know, Denny, I think yesterday, I believe you predicted a 25-point cut.
Yeah, I've been wrong too many times. So.
Well, we all became experts in this last little bit. So, but, you know, what are your thoughts on no rate cut at this time? I mean, it was a 50-50 sort of chance going into it based on, you know, what I kind of consumed and what people were expecting.
Mm-hmm.
So it's not like it was a big surprise, but I think the expectation of a rate cut has been very volatile. Like I think a month ago or when Trump first announced tariffs and all that, there's a little more chaos. And think, you know, some people are thinking there might be more aggressive with the cuts out of necessity, but yeah, no cut.
I had some hesitation. I know that the federal government says the Bank of Canada is a very independent entity and works on their own. I had some speculation that there was definitely some puppeteering with rate cuts, especially going into the election. But this kind of shows that they are just kind of doing their own thing. Because I think if Carney had his say, being in power right now, going into an election in 2 weeks, he probably would have had another rate cut.
I think my thought is they're probably going to have future rate cuts with this one being a hold. So maybe it's just more to come in summer.
Do you think politically though? Do you think that is something they talk about in the next couple of weeks?
I don't know.
Yeah.
I don't know. I don't know like in terms of like the actual candidates or in terms. Yeah, I don't think so. My guess is they're just going to focus on those fringe communities that they need to swing the votes for.
Yeah, fair.
You know, they're going to be campaigning hard, probably mostly on the East Coast. But no, I don't think so. I think we're in spring market, and I think a no rate cut is probably minimal news right now.
Yeah.
You know, even if there was a 25-point rate cut, yeah, that might have kind of validated the 7 cuts in a row. Might not. I guess. Do you think anyone's going to be turned off by the market because of this news?
Not really.
Yeah.
I think the overall feeling right now is not necessarily on interest rates anymore. It has been for the last 2 years or 2+ years, but it seems like now it's more on just political uncertainty through North America, tariffs coming in potentially. I mean, on, off, who knows what's actually going on.
Yeah.
And then our federal election coming up in a couple weeks. I think it's kind of interesting, actually. The last maybe 4 weeks, I've had way less questions about interest rates.
It is interesting in terms of like, I don't know if you have been paying attention to the news, but like in terms of the mortgage world, a couple weeks ago, call it 2 weeks ago, was probably the time where they were really pushing for people to lock in.
Yeah.
And fixed rates came off a little bit.
Yeah.
So I think 5-year fixed, there were options under 4%, and now they're probably around 4.25 or 4. I don't know if you've been getting any recent quotes, but they've come up a little bit. Yeah. So I did notice from some mortgage brokers that I follow that now is the time to lock in 2 weeks ago. You know? So I don't think this rate announcement, I mean, quarter point, no quarter point, I don't think we're in spring. People that are looking right now are probably not influenced that much by a quarter rate cut, but I would say the people that aren't transacting right now are the ones that are just the opportunistic ones that aren't pinched for space and don't need to move right now. Yeah. What we're seeing out there is people that want to move, that want more space, that are having kids and need more space or relocating out of the city and need to sell. So those people are virtually unaffected by it. It's just the fringe people that would like to move when the time is right, when it makes sense. Those ones aren't getting off the fence.
Talking about interest rates for real estate specifically, we're kind of back to, when I say historical here, obviously I'm talking about the last decade, but historically, like we're kind of back to normal / low-ish rates, right? Like when I want to say maybe just before I started, maybe around the time that you started, it was pretty common to have rates in the 5s.
Yeah. Yeah. I think when I first, I mean, if we're going back to 2008, there was 5-year fix at 5.99. I remember every client secure a 5.99 for 5-year fix. Yeah. And I also recall in more normal years that high threes, around 4% for a 5-year fix was pretty common. So where we're at today.
That's where we're at. Yeah.
You know, but the difference is our prices today are a little higher than they were when last time they were here.
A little higher than 2008.
Well, I guess I'm talking about probably, I don't know, 20. I don't have a history graph on me, but let's call it 20. There was a big window after 2008 where they started like 2012, 2016, in that kind of frame. But those, different, similar rates, but different price points.
Totally. Yeah. So maybe just a quick summary of the last 9 months. So like we said, there's been 7 straight rate cuts for a total of 2%. Our current overnight rate with the Bank of Canada is 2.75, which makes prime at most banks 4.95, which is what your variable rate works off of. And like Jamie said, typical fixed rates right now for 3 to 5 year fixed are in and around the 4 to 4.25% range. I did hear someone that got a 3.98 like 2 weeks ago. So we're kind of right around that 4 to 4.25. I think it might have been an insured mortgage. So you get a little bit of a lower rate with an insured mortgage versus a conventional mortgage. But the next Bank of Canada meeting is June 4th. And talking about mortgage brokers that we follow, I saw a video this morning from our good friend Alex McFadden that he is guessing there's going to be 1 to 2 more rate cuts at some point in the 2025 calendar year for a total of 0.5%. Whether it happens in June or through the summer or fall, obviously to be determined, but that's kind of his guess. And he was saying the outlook over the next 5 years for fixed rates is actually trending up. So I think, like you kind of just mentioned, the time to lock in was a few weeks ago. And we're still like relatively low for those fixed rates. They haven't gone up much, maybe 0.25% over the last few weeks. But the speculation over the next 5 years is that fixed rates trickle up a little bit.
Yeah, I think the risk for banks is part of it. You know, that's. But also, are you seeing clients, or are you noticing a trend whether clients are choosing variable or fixed right now?
Lots of mine have been choosing variable recently.
Yeah. That's the gamble. What do you do? do you switch back to fixed after we've been through the last couple of years, or do you stay course? I agree with you. Like, I don't know. It'd be pretty tough to do a 5. I mean, I think that a lot of people are more risk averse right now. So I get the lure of a 5-year fix. But after going through the last 2 years and seeing the next 5, would you commit to a 4.25 5-year fix for the next 5 years?
Yeah, probably not.
I don't know. The penalty is the kicker for me.
I know that's the thing.
A variable. I could see fixed coming down if the variable keeps going down, obviously, but it's hard to predict beyond a month right now or 2 months right now. We used to have a crystal ball that could go 6 months deep or so, but now it could go both ways. It feels like a complete crapshoot. Like rates could go up, rates could go down. Like fix, like I wouldn't be surprised either direction. I mean, I wouldn't want to see them go up. I think that would devastate the market if they did jump up a little more than expected. We already have a little vulnerable market right now, but I don't know the world of banking that well. But if fixed rates start climbing back over 5%, I don't know. I think that's going to hurt the market. That's a big what if. So I don't think it's going to get there.
Definitely.
But the history, we're back at where 2022 summer rates were at, or in terms of Canada rate, bank prime rate.
Yeah. Yep.
What else you got there?
This is going to be a full podcast, so stay with us. There's going to be a lot of good stuff in here. One, we're going to briefly talk about federal election coming up and the 2 parties who have a chance of winning, the Liberals and the Conservatives. Just some notes around potential policy changes if they get elected that involves real estate. And then just share some info about the current market. What is going well? We did a podcast recently that was our multiple offers back and talking about some scenarios where we saw multiple offers, and those are kind of few and far between right now. So just kind of sharing some stories around what is moving quickly, what is very unpredictable, and what has very little chance to sell this spring and summer.
There's lots of little markets in this city.
Yeah.
Why don't we go into the latest stats from the real estate board? I mean, the overarching, I guess, kind of message was listings are up, sales are down.
Yeah.
That's been a trend for the last few months.
Yeah.
So we're April 16th today. Few days into April, we get the stats from the real estate board on March sales and how they were looking. And March was down 13.4% from this year, from last year, and 36.8% below the 10-year average in terms of number of sales. The number of sales are still down. And the listings are up. So it's not a good equation. It doesn't look good on paper. So listings are up 37.9% from last March and 44.9% above the 10-year average. So sales are 36.8% below the 10-year average, and listings are 44.9% above the 10-year average. Doesn't sound great, but I think we got to remind people of how crazy Vancouver real estate market's been in the last 10 years.
Totally.
And how short on supply and strong on sales it's been for at least half that time.
Yeah.
Our stats are way out of whack when the months are hot, especially 2021, 2022, 2017. So yes, not great news compared to those years, but as we'll get into, Denny, there are little segments of this market that are pretty balanced and not necessarily a buyer's market. Overall, it feels like a buyer's market because you can negotiate one-on-one. You can get subjects into your offer. Yeah. Sometimes a subject to sale, but not always.
Those broad market stats sound pretty bleak right now, and they have for the last year or two. But when you break it down into the little segmented markets that we often work in, whether it be Tri-Cities townhomes or East Vancouver condos or North Vancouver single-family homes, a lot of the markets are actually quite balanced in terms of sales ratios, or even some of them favor sellers. And so I guess the point of these podcasts is really to just kind of narrow in on specific product types that we often deal with and our clients are often looking for, just to kind of give a very clear picture of what our market is actually doing, because those broad stats include every single listing that has hit market in whatever time frame we're looking at. And there's a lot on there that is either just overpriced and has no chance of selling, that is sitting for a long time. And throughout Greater Vancouver with density changes, there's a lot of land assembly listings that sit for sometimes years. And those skew stats.
Well, land assemblies. I think all of New Westminster's highest listings right now are land assemblies that aren't moving and don't really have a chance.
Should we start with what's active or what's slow?
Let's go with what's active. I mean, we're seeing it. We're in it. We've been dealing with multiple offers. We've been dealing with listings that have been getting a lot of interest. We see a little glimpse of what the stats don't necessarily show.
Because when it's difficult to look at every single product type in every single neighborhood. It just is super time consuming. So in narrowing in on a few neighborhoods and product types, I always get a little bit surprised preparing for these podcasts because I assume one thing and then I'm proven wrong by what is actually happening. So one is Brentwood condos under $1 million. There is a lot for sale, right? I think 354 listings currently under $1 million.
Yeah.
And we've had a couple listings there recently. So we've seen traffic coming through open houses and we've seen how long even priced well properties are taking to sell. But when you look at the sales ratio over the last 30 days, Brentwood condos under $1 million, super balanced, 15.8%. So there's been 56 sales and there's currently 354 listings. I thought that was going to be under 10%. I thought that was going to be pretty heavily favored towards buyers. And there is still lots of listings. So there's a lot of overpriced stuff in Brentwood currently, but there's a lot of listings. But that's a higher sales ratio number than I was anticipating.
That was, 56?
56 sales, 354 listings currently.
In the last
30 days.
Last 30 days. Yeah. That's more sales than I would expect. I'm assuming that's probably more entry-level products, 1-bedroom and 2s, not the high-end luxury.
That was looking specifically under $1 million.
Under $1 million. Oh, yeah, of course. Yeah. Okay. Yeah. So that would...
The luxury stuff, if we want to talk about slow, luxury stuff, regardless of neighborhood and product type, is very quiet right now due to a few things. One is obviously interest rates. Two, I think, is just the uncertainty of your product selling that you're trying to upsize to. I think a lot of people are just kind of hanging on and waiting to sell first before looking into that upsize product. And a lot of them are really, really slow right now throughout Greater Vancouver. Something else that surprised me, because, I know you have a lot.
Mine's more, I like your specific examples.
Another one that surprised me was, because I know, again, there's a lot of listings here, is Langley Townhomes. There's 309 listings currently. Sales ratio, 21.6%. There's been 67 sales in the last 30 days and 309 current listings. Again, I thought that was going to be somewhere in like the 10% range, and it's just over 20%.
That's more than I expected. I mean, so there is some life out there, Denny.
There's lots. I like Tri-Cities townhomes, looking Port Moody specifically, 52 listings, 16 sales in the last 30 days. That's a 30% sales ratio.
Yeah.
That's technically, by the definition of seller's market and looking at these sales ratio numbers, that's a seller's market for Port Moody townhomes. Even though when you're in the actual day-to-day of it and you are either walking through these homes with buyers or are you taking on a listing, there's still a lot of uncertainty whether something is going to sell right away or not. And picking a list price is really, really challenging in these markets that have more inventory, because you, one, don't want to undersell something, but you also want to position yourself in a way that has a good chance of getting an offer in the first couple of weeks.
Totally. I think it matters more than ever. We're more, in strong markets, you can price a listing where you think it's going to land, or underprice it for multiple offers and bidding wars and clean offers. Yeah. In this market, you feel like you go 25, 50 too high, you might miss the mark and you might be regretting it 30 days later and you might lose your momentum.
Totally.
It is, there's obvious homes in certain condos that are more predictable, but we operate a lot in New Westminster, 100-year-old homes. Sometimes we're walking in these homes, we don't know if it's going to hit or miss. We think it's going to hit. In normal times it would hit, but in these times, sometimes buyers get a little more particular and picky in these markets. There is more balance in, I guess what I did, or sorry, Denny, before I interrupt you, do you have any other little specific examples, communities? You had Langley.
I got lots, but
Brentwood.
Go ahead. You step in and I'll fill in the gaps as we go here.
I wanted to highlight one little product type in our little neck of the woods, New Westminster, 2 bedrooms, condos between $600,000 and $700,000. So just value play, obviously. When New West aside, if it was Port Moody, Coquitlam, Poco, I think that would be a pretty attractive price point in most suburb markets that are, call it 30 to 45 minutes outside of Vancouver. What I did is I looked at the last 60 days of sales in different markets, and I kind of just looked at where the clumps of price points were most dense, like where most sales were happening. And in New West, it was pretty apparent 2 bedrooms and $600,000 to $700,000 were happening, although we're not getting multiple offers per se, although we did on 12th a while ago. Most that I saw last month did not. None of them did. But the sales ratio is about 4 months of inventory, or call it 25% of the listings are selling in a given month. So if you have 20 listings, that's 5 listings selling in a given month. And I think that 25% sales ratio, or 4 months of inventory, which is kind of on the cusp of like a seller's market, like it's a strong balance market, but tilted towards sellers a touch. That was pretty common for single family homes in New West. I call it between 1.4 and 2 million. Same for Burnaby, under 2. Same for Port Moody, under 2. Same for Coquitlam, between 1.4 and 1.8. Coquitlam, I lowered the price a little bit just because it's a little further out. But when you look at that, call it that typical $1.6 million mid-century 1950s, 60s, or 70s, 2,500 square foot home, for detached single-family homes, Burnaby, New West, Coquitlam, those areas, I would say it's about 25% sales ratio, 10 listings out of 40 selling in a given month, and about 2 of those listings are getting multiple offers. So you get 40 listings hitting a given month in that price range, 10 of them sell, 2 of them get multiple offers, and that's kind of what is happening for single-family homes in that price range. What do you got, Dan? You got a specific example, I think. You're eyeing down something. You
mentioned New West. I looked at New West detached as a whole. And again, these numbers are skewed a little bit because of land assembly listings that have been on market for a long, long time. But New West detached as a whole, 83 listings currently, 9 sales in the last 30 days. Yeah. So that's 10% sales ratio. I would say probably 25 listings are these land assembly overpriced that are going to take forever. So that probably is more like 17 to 20% sales ratio.
You got to really, New West and Port Moody's in the same boat as this. They're not big cities. They don't have a lot of detached homes. The data can get very skewed. Yeah. And in this case, New West has a lot of land assembly listings that are just priced out to lunch. So the 9 sales for 83 listings. Well, 9 sales is low. So New West particularly, and I don't think it's because there's a stigma on New West or anything. I think it's because of just the selection of homes that's come available this year has been pretty low in terms of that sweet spot of family homes around 1.6 million. But that has been a pretty common price point for those 9 sales is around that price. But yeah, for New West, it's just had a low, despite the 83 listings, it's had a low supply of quality family homes. And I think that's a big part of the reason for a lot of the sales numbers being lower than expected. I think the people that have the good homes that buyers want are less likely to sell in these market conditions.
Yeah. New West is famous for over-promising density. And often when you meet with sellers, they've been told by the city or they've heard something through the grapevine from the city that more density is coming. And we've been hearing that for 2 decades?
Not to go on a complete side tangent, but very curious to see how the SSMU, small scale multi-unit density, unfolds in New West, Coquitlam, Port Moody, the markets that haven't copied Burnaby yet.
Yeah.
I don't know. I don't know what direction it's going to go.
Yeah.
I can't find any news on it. I don't think it's a conversation point. I think we're going to be in the dark until the end of the year. But I would say, as far as I've observed, the city of New West is pushing back, and they feel that the current zoning, where you have a single family home with a basement suite and a coach home, that is enough. And going to 4 stratified dwellings or on a property is not even in the conversations that I've seen.
It's funny that you say pushing back, because I would say we do a lot of business in New West, obviously, so we watch the city pretty closely and we're pretty familiar with how the council works. But I would say this is the most excited and least optimistic I am about anything that's happened in my career in real estate, is just to see how the city of New West evolves this density plan to potentially meet what the NDP is looking for, but also, stick to their old school ways of, we don't really want this in our backyard kind of thing. So I'm really excited to see how it plays out over the next year or so. I would assume there has to be some sort of section of New West that meets this small scale multi-unit housing with 4-unit type of thing.
They'll probably give it away to Queensborough. Probably will. Queens Park, though, on the other hand, is going to have a lot of pushback.
Yeah.
I don't know how the city staff truly feel about it. I think my guess is they're overwhelmed with the amount of work it takes to implement a new zoning, and it's just more like just logistically just a nightmare for them to kind of implement that when they're already kind of behind with applications. But I would say that the council's not overly encouraging of it from what I've observed at council meeting when it was discussed a while back. But I think there needs to be some sort of change, because these land assemblies we're seeing in our fine city here, they're not moving. And there's not many examples of successful like townhouse developments or kind of those smaller stratified family home developments. Mm-hmm. There was one on 8th Ave in the West End. Lot of land assembly attempts in Sowerton that didn't succeed. When the density, the official community plan, doesn't encourage investment, there's something wrong with the plan. So I think there needs to be a little more of a streamlined process to get those 15 to call it 1,800 square foot homes built on these single family lots. I don't know I don't have high hopes for New West, but I think the big win of New West this year is that the Pier West development on the waterfront will be complete, and that will activate that full waterfront park from Pier Park to the River Market. That's been a bit of a bleak waterfront. That was a staple of the community before. That was a big draw. They had music festivals, they had events down there. And I'd like to see a world where that comes back. Once there's more life down on the water, better businesses will go in, and New West might finally be talked about as a hot spot for real estate again, like it was many moons ago. It feels like almost a decade ago. Maybe it was 8 years ago, but in 2016, back then, New West was talked about more than it is today. This is not supposed to be a specific New West podcast, but these are super interesting for me to looking at municipalities that are kind of stuck in time. But what's been holding it back the most? Because in my career, I've been a realtor 11 years now. I've watched other municipalities kind of leapfrog New West in terms of market values of like 2-bedroom condos or entry-level single-family homes. I've watched, Port Moody go from 10 to 15% behind New West to 20% ahead of New West in a decade. Is it just the density? Is it just the lack of progression? I think oh, geez, Denny, that could be
that's a loaded question.
Offensive tangent. I think it's a combo of the dynamic of planning in City Hall and what they're trying to discourage a historic city from changing too fast.
Yeah.
I think it took one modern house that they didn't like in Queen's Park to get built for them to implement the Queen's Park design guidelines.
We all know which house that is.
So and then I also think council has comprised of a lot of members that are resistant to change. They see developers as profit seekers. They don't necessarily understand it from a developer perspective, understand a pro forma, understand the finances behind what actually makes communities change. But I don't know if they care. I think they're more focused on what do we get when a development proposal comes forward, what parks and daycares are you going to give us? And that ultimately just stifles development. So council's hearts are in the right place in terms of wanting community amenities, but at the consequence of stopping any development or change and keeping streets like Lower 12th pretty bleak. So you need to I think the planning needs to update the density so that it encourages investment, and council needs to get out of the way and then just let developments happen. That's what Burnaby does.
That's what Burnaby does, for sure. Other neighborhoods?
Oh, balanced markets?
Yeah.
What do you have, Denny, on your list? Do you have a specific one?
What did I not mention yet? Port Moody 2-bedroom condos. This is another one that I thought would be a little less active, but 87 listings, 23 sales in the last 30 days, 26% sales ratio. That is better than anticipated.
Port Moody's a sexy suburb, Denny.
Apparently.
It's still a hot spot. It's not going to get less desirable.
It's so interesting over the course of my career to watch municipalities that when we go through ups and downs in markets, they don't get affected much. And it's just because of the desirability of the cities. North Van is one of them. East Vancouver is one of them. And it seems like Port Moody has turned into this. That regardless of ups and downs in markets, the activity there, stays pretty even. People want to live there. People want to live in North Van. People want to live in East Vancouver. And that doesn't change when interest rates go to 5% or 3%.
I think the knock on Port Moody is just the traffic, because there's more density coming, there's more development coming, and it's already a bit of a traffic jam. But the city's a bit of a traffic jam, and I don't think it's going to get worse. And I think there's other cities like Seattle that have it awful too. So, for rapid transit, Port Moody is going to have to handle a lot more people based on the Coronation Park and the future developments coming in.
It's wild to drive down St. John's. It seems like there's a lot of land assembly signs up along St. John's, which is the main street that goes through Port Moody. But over the last 5 years, there's probably been almost 10 new buildings go up or in the process of going up on that street. And each building is probably 150 to 200 units. They're all low-rise 6-story buildings there. But it's changing significantly, and that street is not getting any wider.
You need to put another row on top.
Yeah.
Maybe a kind of thought is okay, so right now we're talking about some markets that are balanced in a slower macro time. So there's not a lot of housing starts right now, not a lot of new projects getting launched. Projects aren't getting launched because they can't sell, or they're struggling to sell at the prices developers need them to.
Yeah.
They're not building many single-family homes. Those applications are what I think I saw a news headline where they're at 40-year lows. So which makes sense. Who's going to start a single-family home now? And then alternatively, we have Burnaby that's got, I hear, over 200 applications for small-scale multi-unit developments. So Burnaby is completely going against the 180 on what everywhere else is doing. What is going to happen to prices over the next 2-3 years as things kind of normalize? So right now, arguably our rates are kind of getting more normal, but it feels probably just as uncertain as it did, say, 9 months ago when rates were much higher. Mm-hmm. So even though we've had rates come off quite a bit since last summer, the market doesn't feel any more better at this moment in time. Mm-hmm. My thought is when you have these balanced segments in these uncertain times, the moment certainty and market confidence comes back and everyone floods in, the products that are struggling to sell start becoming balanced, and the products that are balanced today start becoming strong seller markets that are bidding wars, no inspections, multiple offers. is what's flat today, what like a single family home that's 10% that say sells for 1.8 today, that sold for $2 million in 2022 April. What's that going to do in 3 years from now when we say get 5-year fixed and 3.5%, and I'm just throwing these up here, but in a variable, call it around 3.
I think the gap between strata living and single family living in a neighborhood is going to grow pretty significantly. I think it's as close as it will be over the next decade. All this small scale multi-unit housing stuff, I think is going to be really beneficial in the next 5 to 10 years because it's kind of a missing product that we don't have in a lot of these neighborhoods, like a Brentwood that we've talked about. The 3-bedroom townhouse doesn't exist there. And so this is at least having 200 applications in Burnaby for small scale multi-unit housing. That's going to be, let's say, roughly times 4. That's going to be 800 units over the next handful of years. That is a product type that I think is missing. But what it's doing is eliminating single family. It's taking away the older homes that is the entry level single family that are 1.7 to 2 million, depending on neighborhood. And I think that's just going to continue to grow the desirability of single family and continue to put upward pressure on the prices as the supply goes away. Strata, I don't think is going to move much when you look at the next 3 years. I think the activity levels will likely pick up as markets normalize a little bit, but I don't think you're going to see big gains in price points over the next 3 to 5 years on strata on your typical like 550 square foot 1-bedroom condo in Brentwood or up North Road in Burquitlam or Metrotown or any of these neighborhoods that have a ton of newer buildings. But I think your single family on a good lot in a good neighborhood is, it's going to be more expensive in 5 years than it is today. That's for sure.
Yeah, I agree with you. I think, in theory, a single family home on land should go up more than a condo or a townhouse over a long run. But in a short term, things can go a different direction. I think it was about probably a decade ago, I sold my condos and only wanted houses. So I just said, you know what, houses are going to go up more, condos aren't. And there's definitely been years where that hasn't been the case. I mean, condos, townhouses as an investor angle, they cash flow a little better often. But there's been moments where townhouses, because there's a shortage of family homes, have gone up just like single family homes. And there's been moments where condos do the same when they're not necessarily, call it brand new or luxury condos. They've always kind of lagged a little bit, but those entry level 5 to 15-year-old condos, they've had moments where they've done well as well. And I think part of the reason where single family homes have lagged or development has lagged is because the cost of construction is high. And so in a world where, North Burnaby's experiencing something different because the zoning's up. But if you look at small homes on big lots in, say, I don't know, further out, non-North Burnaby, the value of land is when the numbers work for redevelopment. And that's why Burnaby is active. When the numbers stop working, when people stop tearing down homes, build single family homes, and the city doesn't update the zoning for 4 units, then there's no redevelopment potential on some properties, and then it doesn't work. So there's certain, a 2,000 square foot home on a 7,000 square foot lot in Poco may have not, let's just use it as an example. Yes, Poco went up a lot in prices years ago, but I could see, like you're talking about here, that maybe call it over the last 5 years, that type of homes perform similarly to a townhouse has. But over the next 5 years or 10 years, I think that gap will widen. And the big part of the gap widening is I think that the high construction costs today will make more sense in a few years. And once they make more sense and once density starts making more sense as well, all land will go up in value. I mean, if they did with North Burnaby getting multiple offers for lots that you can develop 4 units on in this market, imagine what it would have done in like April of 2022 if it had this zoning. It would they'd still get multiple offers, but it'd be 10% higher. When I look back at April 2022 and the rates started to go up, that market had momentum at that time. It was trending upward, and then they stopped it with a rate hike and more rate hikes after that. But I felt like at that time, it was like prices were going to probably run another 10 to 15% up if they didn't do anything. So even at those crazy April 2022 prices, I think it could have gone a little higher just because of how much momentum was happening at that time. And then now, everything's changed, full 180. Market's been the last few years driven by affordability, what people make and what people like first-time buyers buying entry-level condos, people that have young families buying entry-level houses.
Yeah.
And less buyers showing up because of high rates. Once those rates come down and everyone shows up, I think everything will go up, but those single-family homes, the gap will probably increase in the next decade. I think the decade ahead is the era of the single-family home separating itself from strata. And I don't know where that border will be. I don't know if it's going to really, like in the Fraser Valley, it might not be as significant. But I would say New West, Coquitlam, West, probably.
With all the density stuff too, if municipalities that have kind of been dragging their feet do adopt it and announce homes can be put into or built 4 units and sold separately, the supply is going to start to dwindle year by year moving forward in the next decade. And I could see this idea of legacy properties, families not selling homes and just passing them down generation to generation to their kids, being a real like storage of wealth through generations, just because the supply is going to continue to dwindle as there's more development throughout the city. I think owning a home on a 50-foot lot in East Vancouver, like we might not see those come up for sale for 40, 50, 60 years because they get passed down. And that just obviously limits the supply, but puts upward pressure on pricing because there just isn't a lot for sale.
I think that's more of a Europe model, right? Where
Totally.
the houses just stay in the
but
family.
As single families go away, like the desirability to live in a single family is not going away.
No.
Just the price to get into it is very difficult for a lot of young families. And I see a lot of those like boomers that are in the midst of retiring, maybe living off some equity in their home, but passing the home down rather than selling and downsizing.
Totally. So going back to the 200 applications in Burnaby for these homes that are 4 to 6 units, probably let's assume they're all 4 units. That's 800 units if it's 200 applications in, 800 units. If 800 units come to the market in 2 to 3 years, or call it 2 years, 2027, I mean, maybe it's not 800, but let's call it 600 units come to the market in 2027. That's a lot of supply of townhouse style product.
A luxury townhouse style product because it's going to be brand new.
Boutique developments.
Yeah, especially talking about Burnaby, you get so much density, you get so much square footage for each of these units. Even on a 6,500 square foot lot, you're getting 8,000 square feet. So each of those 4 units is 2,000 square feet. These are going to be high price point 3-bedroom townhouses or 4-bedroom townhouses.
So you have 600 townhome style products hit the market in 2027. You have towers in Burnaby, new projects getting relaunched, existing inventory selling off, single family home supply is still fixed. That's where the demand or supply is fixed, demand for them doesn't go away or demand increases, prices go up. Yeah. So the supply coming in, the existing supply condos, the supply coming in for townhomes, those will keep those prices in check, but the single family home is rare. It's going to become more and more rare. So yeah, that's a good prediction, an obvious one. But
remember our last podcast talking about investment and where is real estate a good investment and where should you invest? We were talking about some 1-bedroom condo options. We were talking about single family and just what the cash flow looks like on those. But the capital appreciation over the next decade, like let's say you buy a 7,000 square foot lot in North Burnaby, not prime neighborhood, but let's say it costs 1.8 today. What does that cost in 10 years from now?
Depends if we have foreign buyers allowed.
Fair. Totally.
If
could be anywhere from
if the floodgates are down and it's like open market if foreigners had confidence in our government and we're not going to tax them through the roof and change policies right away, there's a scenario where, well, with our weaker dollar and open the floodgates to foreigners, there's a scenario where our prices go through the roof and they don't make sense at all. My guess is there's going to be some sort of block to that. So, when you limit the buyers and you, like right now, when it's only local buyers, you're not going to get that appreciation. There's not enough wealthy people locally to buy up all the development opportunities in the city.
Yeah.
So, no, Denny, crystal ball. This would be kind of a good way to roll into the election, because I think that, that's what's coming up. That's kind of what I think is holding back our market a little bit. It's a lot of news headlines with what's going on south of the border, the tariff talk, all this. I don't see how our market can kind of normalize and people get a little more confidence until we have a government that is in power. And, with our looming election and headlines coming at us from the South and the tariff talk, it's just too much uncertainty right now. So we're April 16th today. At the end of this month, there's an election. In May, we will have an outcome. When do we start? Do you think it's going to change right away? Do you think it's liberals versus conservatives?
When you look at so many of our product types already, they're pretty balanced. So I don't think it changes very significantly through the spring. I think there's more activity. I think you'll see sales numbers. What did you say March was? Down 30%? 10-year average?
10-year average. Let's call it 38%, I think.
38%. Okay.
36.8, yeah.
I think May and June look a lot more optimistic than that in terms of sales volume. But in terms of prices climbing, I don't really see that happening in the short term.
Now, this is pretty random and hard to have any substance behind it, but do you think we're going to hit a 10-year average sales month?
Probably not.
Okay. And probably shelf that until next year, or at least in the fall?
Yeah.
There's a scenario where the fall becomes a very busy fall.
Yeah.
We get through our election, they do a few more rate cuts, we have that summer lull.
Yeah.
Everyone forgets, everyone comes back in September, realizes, money's cheaper.
Yeah.
Government's stable, hopefully. Tariff talk minimizes. Hopefully we're not in a recession that's trending worse.
Yeah.
There's a scenario where we have a very active fall.
Have you ever seen this many polarizing opinions? And what I'm talking about is when we have listings, there are some that, and working with buyers all the time too, there are some people that think we're at the bottom in terms of real estate prices. We've seen 15, 20% drops in market value over the last couple of years with interest rates climbing. And people think we're at the bottom. Yes, there's some crazy stuff happening in North America right now and uncertainty, but it's not going to go any lower. So now's a good time to buy, because in 5 years from now, it'll look a lot better for you if you own something, if you own assets, if you own real estate. Versus there are other people that are complete 180s that are calling us on listings saying, hey, market's in the tank, economy's going down, we're in this crazy recession. Here's an offer that's $200K below list price. It's just so polarizing, and so there's so much uncertainty that it's difficult to navigate those conversations right now, just because of so many outside factors that we can't control that are happening right now.
I think I'm in the camp where we're in the bottom.
Yeah.
And I say that because certain areas of the city have been flat for 10 years.
Yeah.
On the west side of Vancouver, pockets of Burnaby, there's prices that happened in 2016 that haven't been replicated today. Yeah. That's certain niche pockets. I also feel like our dollar's devalued. So even when a $1 million house is $1 million 2 years later, it's $1 million in Canadian currency, but in global, US funds, it's down.
Yeah.
So I think the investor can justify not being a landlord maybe now and look at other investment opportunities with the uncertainty with, tenancy laws having a lot of power in the tenants and just the way the uncertainty of the market is. But no, I would assume that when there's this much uncertainty and we're coming off high rates and we're coming off this few of transactions, the moment we start seeing stats like we did 2 years ago, 3 years ago, 6 years ago, 8 years ago, prices are going to scream up. Everyone's going to forget. People are going to kick themselves that they didn't take advantage of this window.
Yeah.
And there are other ways to make money. You don't have to invest in real estate, but it's been a game that Vancouver, that BC, that Canadians play on the west side a lot. And I think a $2 million home today could be 2.5 in 3 years if things go a certain path. And I mean, a $1.5 million home could be close to $2 million. But I don't necessarily think a $600,000 one-bedroom condo is going to be a $1 million one-bedroom condo. I think that might be more like $700,000 or $750,000.
Yeah.
We have election coming up.
Yes.
How deep do you want to go on this, Denny?
I'd say,
what do we want to touch on there? Because that is going to impact our market and our worlds.
Summarizing our conversation that we had yesterday.
Yeah.
There's a lot of fluff in these policy.
Yeah.
It's so much gray. There's a lot of overpromising. If we look back at the last decade of federal politics, there's a lot of overpromising, under-delivering. There's a lot of big numbers being thrown out. For example, the Liberal Party says that they're going to create an entity to oversee development and supply $25 billion in debt financing and $1 billion in equity financing to innovate Canadian prefab home builders. What does that mean? It doesn't mean anything. There's no plan of action here. So, the Conservative Party has stuff like that in there too. This is one of the funniest. I laughed out loud when I read this. One of the funniest policies I've ever heard. Implement a NIMBY fine.
A NIMBY?
That's word for word on CBC. This is what it says. The Conservative Party says they're going to implement a NIMBY fine on municipalities that block construction because of egregious opposition from local residents.
Yeah.
How is that mandated?
I think what is the threat to hold back money for infrastructure? Is that basically it?
Yeah, basically.
Yeah. I mean, the conservative kind of mindset is we will reward you if you create more housing. I think 15% more housing per city was one of the numbers. I don't know if you have that in front of you.
Expecting municipalities to increase the number of homes they build by 15%.
Yeah, so conservatives are like, we want to see the outcome, then reward you with funds, whereas liberals want to invest into things that create more.
Yeah.
But it hasn't had a proven track record as of late. Yeah. So, and we'll see. I don't know if conservatives can truly kind of strong arm municipalities to do this. I mean, that's the big unknown. Like NDP's strong arming municipalities in Burnaby, in Vancouver kind of followed suit. And I think Surrey's done something that's a little bit in line, but even Surrey's has a lot of flaws.
Yeah.
And don't question me on Surrey's. I don't know that well.
Yeah.
But municipalities are really, I will say they have one talking about development fees and trying to keep them capped, and one talking about paying cities to keep development fees down to encourage more housing, which seems awful.
Yeah.
If you have a federal government paying municipal governments to get more development applications through, it just seems like a recipe for cities to collect even more money. And where was the accountability there? Is it being used effectively? I mean, I don't like that one. I think our development charges have gone up through the roof, and the idea of them going so high that the federal government subsidizes them for people that want to build houses. I guess if it makes more houses built, sure, but there's a lot of flaws in that too.
It's almost frustrating to talk about them. So let's talk about
Let's go the simple ones. Let's go GST. That's an easy plain and white one.
It's black and white.
Black and white.
And I think this is a really good idea. Helps a lot of people. It helps developers. Right now, new developments, like we kind of touched on already, are really slow. The ones that are launching, they're not selling out in a week like they used to 5-6 years ago. A lot of projects are just being postponed because they aren't going to get the sale prices that they need for the project to make sense. But this is something that will help that for sure. Liberal Party says they're going to remove GST on new homes up to $1 million, and the Conservatives have the same policy up to $1.3 million.
It's going to help. I think I think that new developments should probably be as open to buyers as possible.
Yeah.
Like Canadians are not going to be buying all these places. So I think ultimately whatever party's in power, in order for new developments to come back sooner, I think there needs to be government confidence that they're going to be they can be a good investment and open up the gates to non-Canadians in order for that to go. I can see an argument to say, don't let, outsiders buy houses, detached homes in Burnaby and Coquitlam, selfish reasons. I'd like to keep them for our own, locals, but I don't know where you draw the line in that one.
That would be such an interesting thing to navigate through. And could you see that ever happening where they split product types and say foreign buyer ban on single family, not for condos?
To me, it would make sense. But there's a lot of holes in that, but it could create skewed stats where you see condos go up as much as houses or more if foreigners flooded in. But ultimately, I think the main perk behind it is that foreigners are buying a finished product. So Canadians added value. They went, a lot of economic value added in the construction and rezoning and building process. And then it was sold to, foreigners at the end. Whereas when a foreigner's buying the land and then developing it, there's just less local. Well, I guess it's all done by local trades. So it is staying here, but the profit may be going elsewhere. So I think keeping the value add locally has some benefits, but also I see it as our housing market's not struggling. So why would you open up the demand to everyone in the world, whereas our condo market is struggling and doesn't really have a very bright light at the end of the tunnel for the next few years. What does well, we're going to get into this after this, but like a new condo needs to sell for $1,200-1,300 a foot to make sense.
In Burnaby and Vancouver, yeah.
And so you need kind of foreigners to jump in for those price points. Yeah. So
the other one worth mentioning is the rollover of capital gains. Yeah. And this is a little unclear, so don't quote us specifically on this. But the Conservative Party announced a couple of weeks ago that they would consider implementing a policy that allows you to roll over a capital gain tax if you sell an asset in Canada, if you reinvest those funds into another Canadian asset. Interesting. Yeah. The US has that. My guess is that keeps a lot of funds in the US from going elsewhere because of this ability to roll over capital gain. I think that's an interesting idea.
Yeah, I guess just to comment on that, I think that's part of the draw with commercial real estate in Canada is a big part of commercial real estate is if you sell at a profit, you can reinvest it and avoid the capital gain. I think it encourages investment. I think it encourages people to shuffle their real estate holdings into a more favorable, like oftentimes someone will just hold something because they don't want to incur the capital gain. Yeah. So they're saying the cutoff's at the end of 2026. It gives you a 2-year window for people should create more transactions. It gives people an opportunity it encourages and incentivizes people to invest in Canadian investments. Yeah. So there's a lot of positive, I think, that comes from that. I think that, to me, that's good policy because it allows people to liquidate something they don't want and encourages them to buy a Canadian investment they do want. And that's just going to create more transactions and more economic benefit.
Yep. Yeah. Anything else on election? Otherwise, we talked about the inventory up, sales down, but we didn't mention any of the slowest product types. So I just want to mention a few of them. If anything else on the election first?
No, I think just on the election, things right now as it stands, April 16th, seems like it could go either way. And we'll find out the results at the end of this month.
Looking at polls is a little bit confusing, but like they've just swung so drastically over the last couple months. And I think the last one I saw was conservative like 44% and liberal 42%. But I've seen others where liberals are ahead. So it's kind of a coin flip. It seems like at this point.
I would just say keep it simple, whatever it is in real estate. Like, don't complicate it with too many taxes and rules. Keep it simple. But let's go into what's not hot, because there's a little bit of that.
It's a lot of luxury. So we kind of mentioned like entry level stuff, whether it be condos in the Tri-Cities, even New Est, Burnaby under $1 million. We mentioned entry level single family is pretty active. But when you cross $1 million, or in detached, when you cross $3 million, the numbers look very different. So when you go to Burnaby detached, over $3 million, 129 listings, 9 sales in the last 30 days. That's a 7% sales ratio.
Which is like 13 months of inventory. If you don't know it, you don't think in terms of sales ratio. It means like it takes 13 months to sell off the existing inventory of that. Yep. I might be off on my math, so don't pull out a calculator if you're listening. Yeah,
less than that is Maple Ridge detached. There's 548 listings in Maple Ridge right now. Yeah. And there was 34 sales in the last 30 days. That's a 6% sales ratio. Going down.
That's worse than I expected. But is there a lot of $2 million plus product in Maple Ridge, or do you remember the numbers?
I don't remember exact numbers for like list prices, but that's all Maple Ridge detached.
Yeah, that's a lot.
And more in Belcarra, as you can imagine. We've talked about that before. 30 listings. It's a small area, obviously. There's been 2 sales. That's a 6.5% sales ratio. Coquitlam detached over 3 million. Any guesses what the sales ratio is in the last 30 days?
Single digit. I'll say 8%.
1.5%.
Oh my God.
There was 2 sales over 3 million in Coquitlam in the last 30 days, and there's 132 listings.
In Coquitlam, 132 listings over 3 million.
Over 3 million.
Yeah, Coquitlam has pretty good zoning for building 6,000 square foot homes.
Totally.
And clearly the demand for 6,000 square foot homes is minimal.
But the slowest market in the last 30 days.
Let's just take a moment here. How many active listings? That was
132.
132 and 2 sales. This is a moment where small scale, whether you like it or hate it, small scale multi-unit zoning makes sense when you have 132 mostly giant homes and 2 buyers that buy them and the rest is sitting. Yeah. There's clearly not enough demand for those giant homes. If those single family zoned homes had the same density as 4 units like Burnaby, do you think the numbers would look like that?
No. Not even close.
No.
If this small scale multi-unit housing came into Coquitlam 10 years ago, most of these homes wouldn't exist. Yeah. Right? Like you said, that's such a good point, Jamie. Like you said, the 5,000 to 6,000 square foot single family home in Coquitlam, first of all, there's not a lot of people that can afford $3.2 million for these homes, but there's not a lot of people that want to live in them.
What's the streets going to look like when everyone's a $3 million homeowner? You're not going to have them lined with kids playing hockey on the street up front.
We have a brand new home listing in New West right now that's 3,600 square feet. And whenever people come through open houses or whatever, I ask them what neighborhoods they're looking in. Have they seen other homes in New West? And a lot of them say we're looking in Coquitlam, New West, and East Burnaby, for example, because price points are fairly similar for new homes. And a lot of them have said, we like Coquitlam, we like a lot of the streets, we like the neighborhoods, but we don't want to live in a 5,500 square foot home. They're just too big, especially for like a young family that has 1 or 2 kids. It's just too many rooms. There's not many people, unless you're multi-generational living, it's too much square footage. Okay, but the slowest market that I found, any guesses?
City? Are we talking about luxury, first of all?
This is a neighborhood and a product type.
A sub-area?
Yeah.
Oh, jeez.
Just take one guess and then I'll tell you.
Houses in Anmore.
Close. That was 6% sales ratio. Burke Mountain detached homes.
Oh, is it?
61 listings.
I don't even know what to guess here.
61 listings, 0 sales in the last 30 days.
Really?
What does that equate to in a sales ratio?
That's poor. That's an infinity. Months of inventory.
There hasn't been many homes. We have a listing there, and I've been watching that market pretty close.
Yeah, that's a little blip. That's a blip. I mean, homes will sell on Burke Mountain. Yeah. There's nothing wrong with it. It's just that little blip is slow.
There was 2 home sales. There was 2 sales in March of single family homes. Both were in the first week, so they don't get into our 30-day window. Yeah. But there's been nothing in the last 30 days to post. Well, even in February, I think it was another 3. So there just hasn't been many. Burke Mountain is a neighborhood that is continuing to grow. There's a lot of new development with townhomes going in, and it is a lot of newer single family homes that are big. The one that we have is 3,900 square feet, and they're over 2 million, and it's an expensive suburb.
I think it's it's luxury is the message. Luxury is slower. It kind of validates luxury. When you're in the business of building luxury, or if you're someone that bought a luxury home with the intent to make money off it, you really want to sell those products at the best times. In a given 10-year window, you might have 2 years of that's really smoking hot, or 3 years that's smoking hot, 6 years that are balanced, and call it 1 or 2 years that are slow. You want to focus on those 2 years that are smoking hot, because man, even in balanced times, luxury is, I can't think of a time where luxury ever really was balanced. I mean, I can think of a blip where it did well, in 2016 and 2021, 2022, but luxury, don't build luxury homes for profit. I get moving into one, but don't build them for profit. Are you done with your slow markets, or did you have another one on the list?
No, that's all.
Okay, I'll just throw in one little thing at the end here, just because we didn't talk about it. It's just rental rates. Just because rentals, that was a bit of a headline. Rental rates have come down. Just pulled up rentals.ca. Vancouver, 12-month, year over year, 1-bedroom rates are down 3.9% and 5% for 2 bedrooms. So that's like a typical 1-bedroom or average 1-bedroom in Vancouver is $25.31 a month. Average 2 bedrooms, $34.30 a month. And rental rates are down a little bit from a year ago. Call it 3 to 5%. So not as desirable to be a landlord right now. No, and I don't know about you, but not many investors looking to be landlords right away. Some people are still buying pre-sales. Not many, but I don't have anyone itching for a condo to rent out right now. Denny, do you have anyone looking for that?
Sold one a few weeks ago.
Okay, never mind. There is some.
It's few and far between. It's not that typical investor that is just looking for a cash flow investment, because that is very, very difficult to do unless you have a big down payment. It's more just like the young families that have saved a bit of money now, that have lived in the home that they plan to live in for 20 years. For the last 5 years, they've saved some money, and they're now almost like family planning. They're thinking, okay, my kids are, 4, 7 years old, 10 years old, whatever it is. I worry that they're not going to be able to afford something in 10 years or 15 years when they're in their 20s. How can I invest to kind of help them through that? And I've had a couple people do that this year that are buying a 1 or 2 bedroom condo that they plan to, hand down to their kids.
Well, I think rental rates will rise again. It might just be, obviously with everything that's going on, it makes sense. Rentals were up quite a bit a couple of years ago. They went on a tear.
Yeah.
Maybe, with housing stops down considerably, and especially if condo projects come to a halt, there's going to be a couple year period where they're going to start screaming up in rents in a few years from now if there's not enough supply coming to market. But there was more purpose-built rentals getting built, so it may not be as short in the supply as I think. But rental rates are down. Don't expect that to stay forever.
As you can tell, there's a lot going on in this real estate market right now. Thank you for bearing with us. That was a long market update, but hopefully a valuable one, and look forward to the next one.
Yeah, thanks for tuning in.